preparing to go live in just a couple of moments' time for the Coca-Cola earnings Q1. It's going to be a big day for the markets today. This is a very, very important stock. We are covering it live here on the Day Trader. Sit back and relax. We're just a minute or so away from earnings with Coca-Cola. Coca-Cola to begin their earnings. Just moments away now. If you've just tuned in this morning, good morning and welcome to the Day Trader. We are about to start the earnings reports from Coca-Cola right now. In fact, we'll go over to the company now and we'll see if they're ready to begin. And we're just a few moments away. We're just listening in. We have the audio coming through, and any moment now our earnings will begin for Coca-Cola. Very, very important for the markets this morning. As you can see this morning, this is the position for Coke, doing pretty good. Looking very nice this morning, doing very well, and we are watching it very closely. Here we go, over to the report.
Company's first quarter earnings results conference call. Today's call is being recorded. If you have any objections, please disconnect at this time. All participants will be on a listen-only mode until the formal question and answer portion of the call. I would like to remind everyone that the purpose of this conference is to talk with investors, and therefore, questions from the media will not be addressed. Media participants should contact Coca-Cola's Media Relations Department if they have any questions. I would now like to introduce Mr. Tim Leveridge, Vice President of IR and FP&A. Mr. Leveridge, you may now begin.
Good morning, and thank you for joining us today. I'm here with James Quincy, our Chairman and Chief Executive Officer, and John Murphy, our Chief Financial Officer. Note that we've posted schedules under Financial Information in the Investor section of our company website at www.coca-colacompany.com. These schedules reconcile certain non-GAAP financial measures, which may be referred to by our senior executives during this morning's discussion, to our results as reported under Generally Accepted Accounting Principles. You can also find schedules in the same section of our website that provide an analysis of our gross and operating margins. In addition, this call may contain forward-looking statements, including statements concerning long-term earnings objectives, which should be considered in conjunction with cautionary statements contained in our earnings release and in the company's periodic SEC reports. Following prepared remarks this morning, we'll turn the call over for questions. Please limit yourself to one question. If you have more than one, please ask your most pressing one first and then re-enter the queue. Now I'll turn the call over to James.
Thanks, Tim, and good morning, everyone. First and foremost, on behalf of our company and our entire system, I'd like to share our deepest sympathies to all those who've been affected by what's happening in Ukraine. The safety of our people and their families continues to be our top priority, and as we highlighted in our release this morning, we are taking actions to provide that support. Now, this morning I'll discuss how we drove strong results in the quarter and that we are reiterating our guidance even in the face of incremental challenges. Then John will discuss the financial details of the quarter and how our work has prepared us for whatever may be around the corner. We all know that much has happened in the world since we last talked with you in February, leading for sure to an operating environment that is fast changing and increasingly complex. However, we remain confident about the future and are well equipped to manage external factors worldwide through our strengthened leadership position with the right portfolio, the right strategy, and the right execution in the marketplace. After a promising start to the year, the operating environment soon changed, with very significant geopolitical conflict, a resurgence of COVID in various places, record high inflation, and continued challenges on the supply chain front. Nonetheless, we've consistently sustained our momentum from last year, moving with agility as conditions changed to generate strong top and bottom line growth in the quarter. We delivered 8% unit case volume growth, primarily driven by strong recovery in away-from-home channels and continued growth in at-home channels. Volume growth was strong across all operating segments, driven by marketing investments and aided by an increase in consumer mobility as the impact of the pandemic abated in most regions. Our enhanced capabilities helped us gain value share overall in both at-home and away-from-home channels globally and across most of our geographic operating segments, a clear indicator of the power of our new approach. Amidst the dynamic macro conditions and an inflationary cost backdrop, we focused on delivering growth. The key competitive edge of the Coca-Cola system continues to be the ability to deliver value for our consumers and our customers in any environment. Our accelerated agenda in marketing and innovation is tying our beverages to daily consumption occasions, adding and creating value for our brands. Additionally, we continue to work with our bottling partners to expand package offerings and strengthen distribution to capture growth opportunities, using all the available revenue growth management levers, including price, to win in the marketplace. These scaled global initiatives are coming to life at a local level all around the world. So let's start with Asia Pacific. In India, we drove excellence in integrated execution as consumer mobility improved across channels by stepping up product availability, adding approximately 240,000 outlets and over 50,000 coolers. We also continue to build relevance through innovation by launching Maaza Aam Panna to leverage our equity in mango and Fanta apple to expand our footprint in the fast-growing fruit-flavored sparkling subcategory. Japan is emerging from an extended state of emergency, and we've increased our consumer base and driven market share gains in key categories. The Coke On app reached 35 million app downloads, continuing the direct engagement with consumers to create and capture value. We also continued our focus on ESG initiatives with 100% recycled PET bottles now available in Japan for 5 key brands, including Coke and Georgia Coffee. In China, a strong start in January, led by an excellent Chinese New Year brand activation with Coke, was followed by strict COVID lockdowns, and this resulted in reduced consumer mobility. Momentum reversed in February and March and led to a decline in unit case volumes during the quarter. We're moving fast to focus on core SKUs and ensure product availability. We're adapting how we engage with consumers depending upon local market conditions, and we're working in close collaboration with our bottling partners to focus on execution basics like increasing multi-pack availability and maximizing share of visible inventory in channels and regions that are open. In ASEAN and South Pacific, we gained share in key countries and across most categories while consumer mobility was mixed and supply chain headwinds remained. Growth was led by trademark Coke and sparkling flavors, driven by strong end-to-end execution of the Zero Words, Sprite Heat Happens, and the Fanta Colorful People brand campaigns. In EMEA, notwithstanding the conflict in Ukraine and an uptick in inflation, we delivered a strong performance in Europe in the quarter. The continued rollout of new and improved Coca-Cola Zero Sugar across key markets helped drive 5 percentage points of sparkling single-serve mix growth, which is ahead of pre-pandemic levels. Topo Chico Hard Seltzer is closing the gap with the #1 hard seltzer brand in Europe, and the eB2B business with myccep.com accounted for low double-digit contribution to total revenue. We are keeping a close watch on the spillover effects of the conflict in Ukraine on the health of the consumer, and we remain ready to pivot and adapt. In Africa, macroeconomic recovery is underway, although conditions remain challenging due to inflationary pressure. In South Africa, we accelerated refillable PET expansion and the execution of in-store sampling to retain consumers. We are connecting with our existing customers in the digital space and have surpassed 65,000 outlets on the Wabi eB2B platform, significantly ahead of plan. Despite macro volatility and intense inflation in the region, Eurasia and Middle East drove top-line growth through a strong suite of marketing programs across categories led by sparkling and ready-to-drink tea. In Turkey, Coca-Cola Zero Sugar became the number 2 immediate consumption player in value share behind brand Coke. In Pakistan, Coke Studio, a platform that unites diverse cultures through the power of music, drove social engagement that reached an all-time high in terms of impressions and viewings. In North America, we are seeing more inflation and are continuing to navigate supply chain dynamics. We're closely monitoring further pressure in some inputs such as high fructose corn syrup, PET, and metals, along with wages and transportation as they impact us as well as our bottling partners. Despite these challenges, we continue to gain share in both at-home and away-from-home channels and across most categories. The strong rollout of Real Magic platform and the successful launch of Coke Starlight resulted in Coke trademark being the fastest growing trademark in measured retail, driving household penetration up a full point. Powerade's Pause Is Power launched during NCAA March Madness, generating more than 1 billion impressions. We also continue to learn from the returnable glass bottle pilot that has been implemented in the Southwest. In Latin America, we delivered strong performance despite challenging macro conditions, and the investments we made to sustain momentum are paying off. We remain focused on integrated execution and drove revenue growth faster than transaction growth, both of which grew faster than unit case volume growth. Our work to strengthen the traditional trade is paying off as the channel showed the best underlying performance across all channels. The Prospera loyalty program added nearly 50,000 retailers in the quarter while continuing to advance our customer-focused digital expansion. Notably, we have digitized nearly 2 million customers in the region, and we are leveraging the strong system alignment with our bottling partners and are continuing to execute for growth. Within Global Ventures, despite an inflationary backdrop in the UK, Costa continued to recover, driven by retail and strong like-for-like sales with Costa Express. In China, while retail sales were impacted by store closures due to the pandemic, Costa ready-to-drink coffee sustained its number 2 position and continued to innovate with Costa Cha. Finally, our bottling investments group delivered strong Q1 performance, driven by the expansion of affordable immediate consumption entry packs in key markets, and this resulted in share gains in sparkling. We also continue to make progress towards optimizing trade promotions and cost to serve in our key markets and raise the bar on operational excellence. Clearly, the operating environment is proving to be more challenging, but we're pleased with the results we delivered in the first quarter. We continue to believe the recovery in 2022 will be asynchronous. We anticipate many new chapters and challenges, including but not limited to ongoing geopolitical conflict, uncertain consumer sentiment amidst the increasingly inflationary environment, accelerated cost pressures and ongoing supply challenges, and of course, the continued evolution of the pandemic. That said, the changes we have made during the pandemic have left us better positioned than ever to capture growth, increasing our confidence in the future. The multiple levers of revenue growth management have never been more important, and our investments in building this capability over the past few years are giving us a clear advantage. Further actions on pricing will depend on the consumer and inflationary environment as the year progresses, but we will continue to rely on a mix of price, package differentiation, and ever sharper promotional strategies. Through integrated RGM and execution capabilities, we adapt to local market conditions and give consumers what they want, where they want it, and at the right price. By extending package offerings to keep transaction-driving price points in play, we retain consumers through affordability while also driving premiumization with innovation and targeted pricing. For example, in Latin America, we are continuing the expansion of refillables to sparkling flavors and juices, and this remains a compelling consumer proposition to address the need for affordability. In North America, we're maximizing value by initiatives like the one expanding the availability of mini cans for consumption across occasions such as breaks and meals, and by offering 6-packs, 10-packs, and 30-packs, driving an approximate 45% increase in retail dollars in measured channels and a near 20% increase in total distribution points. Our networked organization structure extends to our system. Our bottling partners complement our progress against our capabilities by continuing to invest in the marketplace, and they help put our purpose into action. We have strong partners with highly capable and experienced leadership, and we continue to build and foster our business and economic relationship that drives system health and long-term growth opportunities. With our purpose to refresh the world and make a difference, we continue to focus our ESG work on issues where we can have a measurable, positive impact on communities, as well as create opportunities for our business to grow. We release our fourth combined business and ESG report tomorrow, an integrated approach to reporting that is a strong demonstration of how sustainability is linked to our business, builds resilience, and demonstrates transparency. We have a long history of assuring select sustainability metrics while also providing key public disclosures against the TCFD recommendations, as well as other reporting frameworks such as SASB, GRI, and the UN Global Compact. In the report, we highlight how we and our bottling partners are driving business growth through our interconnected ESG goals and how we continue to seek an exponentially greater impact by fostering collective action, partnering across industry, government, and society to address shared challenges. In conclusion, while there is no doubt the world is more uncertain and the operating environment remains highly dynamic, our strategy remains the same: to execute for sustainable growth through strengthened capabilities in innovation, marketing, RGM, and execution. Now I'll turn the call over to John.
Thank you, James, and good morning, everyone. Today, I'll highlight our first quarter performance and discuss our full year 2022 earnings guidance. Then I'll provide commentary on the overall operating environment and how our organization is navigating effectively to drive results. Let me first start by saying how pleased we are with the results in the first quarter. We delivered strong organic revenue growth of 18%. Unit cases grew 8% with strong growth across all operating segments. Concentrate sales were ahead of unit cases by 3 points in the quarter, primarily due to the timing of shipments in Latin America and EMEA. Our price mix of 7% was driven by strategic pricing, revenue growth management initiatives, further improvement in away-from-home channels in most markets, and positive segment mix. Comparable gross margin for the quarter was down approximately 90 basis points versus the prior year, primarily due to the impact of two items. One, consolidating the body armor business, and two, currency headwinds. Underlying gross margin expanded despite continued pressure from commodity costs due to pricing actions in the market and a benefit from the timing of concentrate shipments. We continued to prioritize consumer-facing marketing to maximize returns while driving productivity in our operating costs, leading to leverage in the P&L. Comparable operating margin expanded by approximately 50 basis points despite acquisition and currency headwinds. First quarter comparable EPS of 64 cents grew 16% year over year. This was driven by strong top-line growth, which benefited from the timing of concentrate shipments and operating margin improvements, partially offset by currency and cost headwinds. On the cash flow front, we delivered free cash flow of approximately $400 million in the first quarter, as our strong business performance was more than offset primarily by two items. One, cycling the timing of working capital benefits in the prior year, and two, higher 2021 annual incentives paid in the first quarter. We remain confident in our ability to deliver on our cash flow goals for the full year. Our balance sheet continues to be strong, with net debt leverage within our targeted range of 2 to 2.5 times. As James mentioned, much has happened since we last gave guidance in February. The conflict in Ukraine has created further volatility in the world, as well as added to the inflationary backdrop and impacted the currency market. The resurgence of COVID in China and some other geographies around the world is a clear indication that the pandemic is still very much a part of the conversation, and a reminder that the recovery path has been and will continue to be asynchronous. Obviously, there are lots of puts and takes at play, and we see a number of potential futures coming at us. But notwithstanding this backdrop, we believe our organization is better prepared today, and we're confident in the flexibility we've built and our ability to manage what's around the corner. We continue to spin the growth flywheels faster, and our local businesses are adapting and executing for growth. With that in mind, this morning we're reiterating our guidance for 2022. We continue to expect organic revenue growth of approximately 7 to 8% and comparable currency neutral earnings per share guidance of 8 to 10% growth versus 2021. Based on current rates and our hedge positions, we are reiterating our currency outlook of a 2 to 3 point currency headwind to comparable net revenues and a 3 to 4 point currency headwind to comparable earnings per share for full year 2022. Additionally, taking into account our current understanding of recently issued regulations, we now expect an effective tax rate of 19.5% in 2022 versus the 20% that we had guided to previously. All in, we continue to expect comparable earnings per share growth of 5 to 6% versus 2021. And we continue to expect to generate approximately $10.5 billion of free cash flow for 2022 through approximately $12 billion in cash from operations, less approximately $1.5 billion in capital investments. To put this guidance in context, there are some considerations to keep in mind for 2022. The direct impact of the Ukraine conflict and the resulting suspension of business in Russia is estimated to be approximately 4 cents to comparable EPS. The recent increases in commodity costs are having an incremental effect, but based on current rates and hedge positions, we expect commodity price inflation to remain in the range of mid-single digit impact on comparable costs of goods sold in 2022. Additionally, we see incremental cost pressure coming from areas like wages and transportation. The consolidation of the body armor finished goods business will continue to have a mechanical effect on margins. When it comes to capital allocation, our priorities remain the same, and we continue to balance financial flexibility with efficient capital structure. For 2022, we announced a dividend increase of 5%, a higher rate than in recent years, and we also announced the resumption of share repurchases with approximately $500 million in net share repurchases expected this year. Despite uncertainties around the world, our strategic transformation has fortified the organization to weather the storm, and we are extremely proud of how our people are responding and delivering. We are keeping consumers at the center, operating more effectively and efficiently, and unlocking the immense potential of our growth portfolio of brands. This gives us confidence that we can deliver on our guidance for 2022. And with that, operator, we are ready to take questions.
Ladies and gentlemen, to ask a question, you will need to press star one on your telephone. To withdraw your question, please press star one again. In the interest of time, we ask that you please limit yourself to one question. If you have any additional questions, you may rejoin the queue. Our first question comes from Lauren Lieberman from Barclays. Please go ahead. Your line is open.
Great. Thanks so much, and good morning. I was hoping we could talk a little bit more about Latin America, an area like you called out of outperformance, in particular Mexico and Brazil this quarter. And I sort of two sets of questions. One is, this is a region where your partnership with bottling has been particularly strong, certainly versus the past. And if you could talk a little bit about how that may be enabling your ability to be performing as well as you are in this challenging times? That's kind of one. And then two was there was a mention in the release about shares being down. I'm guessing it might be in juice because I think you talked about sparkling being up, but anything in particular you're doing or the degree to which the market share performance is an area, a watch point for you and how you're balancing that versus thinking about recovering cost inflation. Thanks.
Yeah, there was, I think we'll call that several questions.
I never do it though, so I'm sorry. It's the first time.
Okay, we'll in the spirit of generosity, we'll try and, because they're very related. Look, we have a great partnership with our bottlers in Latin America, from the two very big ones, Coke FEMSA, Arca Continental through Andina and some of the more country-based bottlers. And we have developed collectively as a system many capabilities on many fronts, whether it be marketing or innovation, but particularly the levers of revenue growth management and execution in volatile times. It escapes no one's attention that Latin America is a place that has had a roller coaster of economic growth and inflation and difficulties, and we have a very deep partnership with these bottlers to work through these times, and that I think you see reflected in this quarter as we had a lot of good growth. The share did come in negative overall. I think there's a couple of things going on there. As you say, we did a lot better in sparkling, a lot of good execution in sparkling, and there was some pressure as much in juice or some of the juice drink categories, but also category mix. We are very much focused on, as we've talked about previously, that when you are in a cost environment, that those cost increases, whether they be commodities or wages or logistics or marketing costs, need to go through over time. We have to earn the right for the brands to take it, but they need to go through. Sometimes when you're in a very high share market like Latin America and you lead on pricing, not all competitors necessarily follow immediately, and that can have temporary impacts on share. But we, with the bottlers, will be very focused on not only continuing to carry on growing, but to regain and expand our share position.
Our next question comes from Dara Mohsenian from Morgan Stanley. Please go ahead. Your line is open.
Hey, good morning. So I just wanted to focus on top-line visibility here. You obviously kept the full-year top-line guidance despite the Russia impact, so underlying sales are moving up ex-Russia, and Q1 was another strong quarter. But clearly there's risk consumer spending might weaken with the unprecedented inflation we're seeing. So first, maybe just looking backwards, can you give us an update on if you're seeing any signs of consumer stress in terms of impacts on your business or pushback to higher pricing around the world, either late in Q1 or in April? And then also on a go-forward basis, can you juxtapose the positive impact of normalization of COVID behavior on your business as away from home recovers, maybe versus any potential macro pressure you could see or consumer spending weakness, and how that impacts your visibility in terms of full-year top-line view? Thanks.
Well, clearly my act of generosity with Lauren has unleashed a torrent of multi-question questions, but it'd be harsh to cut it off at this stage, Dara. Look, a couple of things. We did come in with strong momentum out of 2021 and come into this year. And as I and John and we talked about previously on calls, we believe that pricing for our business has to be earned for the brands. We have to give the consumer and the retailer a reason for the price increase and for the value of our brands, whether it's the marketing, the innovation, the execution, or the packaging options we do there. It's not a cost plus business, although we do seek, of course, to protect the margin structure by moving through changes in commodities and other costs. But we very much foresee, as experience and history, who was it, Mark Twain said, history doesn't repeat itself, it just rhymes. Well, when you go into high inflation, consumers come under pressure. There's clearly reductions in real purchasing power going on for some segments of the population, if not everyone, around the world. And so our focus is very much to find those packaging and price options by channel where we can stay connected to people who are coming under purchasing power pressure. Very much affordability, just building on the Latin American example from the last question. A lot of focus on returnable, refillable bottles because the economics of those packages work to an extent that you can have a lower price point for the package. And with reductions in purchasing power, we very much see the actual out-of-pocket price point and keeping a low entry point into the category is very important. Also pushing the expansion of refillables in places like South Africa. So very much acting on the signs of consumer purchasing power pressure, but very much also anticipating that it will increase. It would be great if there were a perfect landing out of this inflationary environment. The rhyme of history would tell you that at some point either inflation or reduction in purchasing power or supply constraints eventually create a bump. And at that point, we will want to both be accessing the premium opportunities that are there, but very much with an anchor in the affordability and entry price point opportunities and necessities as consumers come under pressure.
Our next question comes from Steve Powers from Deutsche Bank. Please go ahead. Your line is open.
Hey, good morning. When I think about just the approach to capital allocation and business reinvestment, as you talked about it in the prepared remarks, you framed it as essentially unchanged as a framework, but with all the variability you called out, in the operating environment, I guess I'm curious as to where there are areas of your going-in plans where maybe you pulled back a bit versus other areas where you found yourself now leading in more. Maybe, James, to your answer to the last question, maybe it's now affordability or something like that. But just again, overall spending, as you framed it and as the guidance implies, seems intact. But my sense is it's moving around a lot under the covers. So just I'm curious how that kind of agility is manifesting in terms of reallocations of spend. Thanks.
Thanks, Steve. It's John. Let me first just lay the picture of total capital allocation. The first priority is to invest in the business, and as James just said, when you think about the environment that we have been dealing in and we will be dealing with the rest of the year, the name of the game is right now is to do exactly that, is to continue to invest in our brands so that we have the wherewithal to manage through whatever comes at us. I think at a local level, the mix of investment is something that we continue to be very flexible with, and we are leveraging the work that we have been doing over the last couple of years to be even more effective in how we're spending our marketing dollars, whether it's on building our brands or whether it's on supporting our RGM efforts in the marketplace. The other areas of our capital allocation framework, supporting the dividend, looking at opportunistic M&A, and share repurchase, we covered in the script with the dividend and share repurchase. We continue to be very open as to what opportunities may be out there, but in the here and now, the top priority is investing appropriately in the business. And as I say, the mix of that investment is something that varies and will continue to vary depending on what we need to do locally.
Our next question comes from Bonnie Herzog from Goldman Sachs. Please go ahead. Your line is open.
All right. Thank you. Good morning, everyone. I had just a big picture question about, how you're working with your bottlers who are experiencing pretty sharp cost pressures to essentially help them navigate through this tough environment. If you guys could talk about that, and also looking at the equity income in the quarter, it remained relatively strong, but is the expectation going forward that there will be a greater impact in the next couple of quarters given some of these pressures? Thank you.
Yeah, sure, Bonnie. I mean, I'm not sure it would be appropriate to comment on equity income into the future for our bottling partners. But as we go into a tough environment, as we always do historically, we make sure that we intensify our collaboration and partnership with our bottlers, both to work on what are the marketing programs and the innovation programs that are gonna, work in the consumer and the retailer environment that we face wherever we are in the world, and also the execution initiatives and focus areas the bottlers can drive on. Because firstly, the environment is not the same in every country around the world. Some are opening up exuberantly and actually chasing and keeping up with demand and the kind of the reopening euphoria all the way across the spectrum to parts of China like Shanghai, which is in full lockdown as though it were April 2020. So the environment is absolutely not the same in every country, and we have to work where on the curve of all the change are we, and be very clear. And in terms of the pressure, as you talked about it, the pressure is both headwind and tailwind. Clearly, there are headwinds in terms of cost, whether it be commodities, logistics, wages, and as I said earlier in one of the questions, we work with our system, our bottling partners, to make sure we protect and sustain the margin structure over time. That's not necessarily true every single quarter, but that is our overall objective: earning the right to price the brands so that the system, has the sort of margin structure and stability of that over the course of time, if not every single quarter. But there are headwinds. Balancing those headwinds, there are tailwinds out there. As I said, the reopenings provide fuel not just for overall demand, but improvements in channels, away from home channels where we're strong, and leaning in with investment produces great results. So there's a lot of variables at play in the downhill of the year, and really just the key is the intense partnership with our bottlers to make the most of the opportunity ahead of us and to prepare ourselves for step 2 and step 3 further down the road.
Our next question comes from Bryan Spillane from Bank of America. Please go ahead. Your line is open.
Hey, thanks, operator. Good morning, everyone. James, I wanted to just circle back to the comments you made in the prepared remarks about ESG and I guess tying it to comp. If I understood the proxy correctly, there's been 2 changes. One is the ESG component now being a portion of both the annual and long-term comp. I think it moves to 10%. And then also for your annual long-term incentive comp, the amount that's paid out in stock options, I think goes up from like a third to a half. So just wanted to sort of get your perspective on, why make those changes now and, just what it signals about, your focus going forward.
Yeah, thanks, Ron. Yeah, I mean, firstly, would refer everyone who wants greater depth to the proxy that's out there on our website, and we've tried to lay out some of the mechanics and our thinking behind the 2 things. We have made some changes, as you point out, Brian, to the way the long-term incentives, or more specifically the performance share units, which are kind of a 3-year program. We got a 10% element in that that's linked to our ESG goals. And so we are laying out some very specific targets that will drive a portion of those payouts. And because some of those ESG objectives take some time to execute against, we felt they were better embedded into the 3-year stock award programs. And then secondly, as you point out, with the board and with the compensation committee, we felt to increase greater alignment with share owners, we would readjust the balance of performance share units versus options for myself, and push that up to 50%. I mean, you can take that as a confidence in the future, but that's one very small stone on a large pile of stones of things we do to demonstrate that we believe this is a great company with a great future.
Our next question comes from Nik Modi from RBC Capital Markets. Please go ahead. Your line is open.
Hi, good morning. This is Filippo Falorni for Nick. My question is on pricing. Clearly, price realization has been very strong in the carbonated soft drink category and particularly North America with a very rational environment in the industry and pretty low elasticity so far. So can you comment how you balance the need to take pricing while ensuring affordability using price pack architecture, your revenue growth management, given this inflationary environment and the impact on consumer wallets in North America and in other parts of the world? And then second, if you think you will see more promotional activity in the industry in the balance of the year. Thank you.
Our approach to pricing, I've commented a little bit on it already. Firstly, the highest level principle is the brand has to earn the right for pricing, and that is, the combination of its activities in marketing, in innovation, in execution, and the investments in the store, and of course in RGM to make the packaging and pricing architecture fit the consumer's needs. Obviously, what goes into a piece of that puzzle is also the cost environment, whether that be commodities, marketing, logistics, etc., etc. And we seek to balance the various challenges using RGM, as I said earlier, clearly, as we go into reducing consumer purchasing power, we need to have affordability as front and center, and that, depending on where you are in the world, can take the shape of different packaging, but it all becomes about the entry price point of the category, not the kind of the higher end price points of the category. But you balance that out by having moving up the price points on other package combinations. It all has to go in the mix, and it is all done with a perspective that not necessarily every single day, but in a reasonable time frame, the margin structure of the system needs to be sustained. You definitely don't want to get to a point where there's been a substantial cost push through, and that has not yet been passed on into the marketplace when any recessionary impact appears. Trying to catch up on pricing in a recessionary environment is very hard, and so we have a bias to action. In the same way we have a bias to invest behind our brands in marketing innovation, we have a bias to keep up with cost pressures as they occur. And that, of course, leads us to take pricing more or less frequently, depending on where you are in the world. And I expect to see more of that in the rest of the year.
Our next question comes from Kaumil Gajrawala from Credit Suisse. Please go ahead. Your line is open.
Hi. Maybe a quick one and a single question. Is there any update on the tax litigation matter? Perhaps maybe not just on your end, but some of the other moving parts, I suppose, on what needs to happen beforehand.
Quick answer. No updates, no developments during the quarter. We'll keep you posted as they happen.
Our next question comes from Carlos Laboy from HSBC. Please go ahead. Your line is open.
Yes. Good morning. I was hoping you could give us an update on some of the stepped up efforts on for refillable packages in Latin America and how that's going, please. Thanks.
Yeah, sure. Thanks, Carlos. Clearly, as part of both our RGM initiatives, because the refillable, reusable packages tend to give you the opportunity, especially in larger sizes, have a lower entry price point, which is particularly useful in developing and emerging markets. And so you have an intersection of a very important business imperative on affordability and the fact that ultimately a refillable package is less likely to go to waste and has a lower carbon footprint. And so it really complements our World Without Waste ESG strategy, where we're looking to create circular economy around our packaging material. So the two intersect and give us the two imperatives that both point in the same direction. And so we're very much looking to invest behind refillable packaging, making progress in gaining in mix in Latin America, also been driving that in parts of Africa. We've even taken to experimenting with returnable glass in the southwest of the U.S. And so, we are very focused on this because it does work for both of these imperatives. And so expect to see kind of more focus and more investment behind keeping that up and working with retailers to make it simple for the consumers to get the credits when they return these reusable bottles. So very much an investment focus.
Our next question comes from Andrea Teixeira from JP Morgan. Please go ahead. Your line is open.
Thank you, and congrats for this quarter. James, just to conclude on pricing, you mentioned that you continue to monitor further inflation pressures and also alluded to potentially further pricing. Are you seeing I'm assuming you're seeing better than anticipated price elasticity. Do you see room for additional pricing, perhaps in developed markets, any particularly in certain clusters in the U.S.? And if not, any flexibility to protect the bottom line with SG&A efficiencies that you can highlight at this point?
Well, clearly, I've talked about our approach to pricing several times, and that is going to lead to more. There are going to be more price increases depending on where you are in the world. There are countries with inflation well into double digits, and you do see multiple price increases during the year as a matter of course when you're in those sorts of circumstances with cost pressures to push through as you seek to sustain margins over time. And let me just address the elasticity question. It has been apparent, and other people have commented on less elasticity in recent times as price increases have gone through. I do not expect elasticities to be inelastic going forward. There's a reason it got the name elasticity. And so I fully expect, as I commented earlier on, inflation generally ends with some pressure somewhere. I expect elasticities to increase at some point in the future. Will that be next quarter? Will that be next year? I can't give you the answer to that because it's very dependent on some macros, and it's probably going to vary by country. But we are very attuned to it, which is why I talked about how we are leaning into investing behind our brands so that we earn the right for the price increases, so that we can minimize the elasticity, and that we keep a sharp eye on affordability, which again tends to minimize elasticity if we use RGM well. But as I say, if the choice comes down to we think the elasticity is going up, or we're going to have to not pass through some cost, we're going to err towards taking the price increase rather than not taking the price increase. As I said earlier, not seeing the costs go through and arriving at a recession, being behind the curve, is less desirable than embarking and having to take the hit from a greater elasticity in the short term. And so that's our kind of modus operandi. And we will certainly seek to earn the right to take the price increases. We certainly aren't looking to take price increases just because we can. We want to earn them as a brand, and we want to make sure we recover the costs over time.
Our next question comes from Rob Ottenstein from Evercore. Please go ahead. Your line is open.
Great. Thank you very much. James, in the opening comments, you mentioned that you had digitally connected, I believe, with 2 million customers in Latin America. Can you elaborate on, what that allows you to do, what that means, the upside there, what you're seeing in the market from that, and how you expect to or how you plan to roll that out globally? Thank you.
Yeah, thanks, Robert. This is a very important area for us and our bottling partners. Simply put, the idea of connecting these customers is essentially that our retailers, particularly the traditional trade and the fragmented trade, remembering that on a global basis, about half of our sales go to the fragmented trade, whether that's from grocery side or fragmented in terms of being away from home and eatery type trade. About half of the global sales go to that. Is being able that they can order the Cokes they need or the rest of the portfolio that they need. They don't have to necessarily wait for the salesperson to turn up. This isn't about replacing the salesperson. Very far from it. This is about enabling the selling system to be even more effective in being able to connect with the retailers, generate orders. And so very much it's about a Salesforce enablement system, such that, in the same way that consumers in the developed world can just use their phones with whatever system, with whatever app is appropriate, to order things, and they don't have to go to the store to get them. We see that the bottling system will be able to sell more, and very much in the where we've implemented these systems, where it's a complement to the sales force, it has driven extra sales and driven retailer loyalty. And so we think we can see, and obviously we're very much engaged with the bottling partners to drive the connectivity, particularly for the fragmented trade, so that they can order whatever they want, whenever they want, from the Coke portfolio. And that's as true in the rollouts as you called out in Latin America. myccep.com is the same basic idea. It's all about technologically enabling the selling system to be more effective for the retailers.
Your next question comes from Laurent Grandet from Guggenheim. Please go ahead. Your line is open.
Hey, good morning, everyone. I'd like to come back to the progress of Costa Cafe. I mean, it was mentioned in your program. I mean, coffee was up 27%, but some of it was of that growth was coming from cycling in the Costa store closures. Could you expand maybe more on the non-store business progress, hot and cold? Where are you expanding the brand? Which countries? And what are you seeing in terms of consumer reaction? Thank you.
Yeah, hi, Laura. Looking at the non-retail bits of Costa, the express machines, the kind of vending digital barista machines, had a very strong quarter with transactions growing strongly, and we're seeing now that reopenings have occurred, we're starting to see the focus on placement of new machines across Europe and the Middle East, and also in China, although that's got a little harder in the last couple of months. But the express machines still doing very well. Obviously, they need the opening of the world to happen. And then on the Proud to Serve front, which is kind of providing the beans and machines to independent outlets, starting to ramp that up more in the Europe environment. Again, early days. We did launch some tests in at home. That's too early to kind of call. And then Costa Ready to Drink is done pretty well in China. It's sustained its number 2 position. It's continuing to grow, and we've launched it also in some of the European markets. So starting to see those innovations roll out, and we'll see how they do in the coming quarters.
Our next question comes from Kevin Grundy from Jefferies. Please go ahead. Your line is open.
Great. Thanks. Good morning, everyone. James, I wanted to pivot to your business in China, given the uptick in COVID cases there and related lockdown measures. Perhaps you could just comment on, 1, what you're seeing from a demand perspective, 2, perhaps the exit rate for March and what you're seeing in April, and then 3, maybe just more broadly, the company's ability to better execute, in your view, despite lower levels of consumer mobility now that we're 2 years into the pandemic. So thanks for that.
Yeah, sure. I mean, clearly, China is an important market to us. As I said in the script, we had a strong start to the year going into Chinese New Year, but the lockdowns, particularly Shanghai, took the steam out of things, and we ended the quarter negative. The key factor will be the degree of mobility, we had. And depending on how big that is, will make a huge difference to the level of results. I don't think there's anything to call from the early days of April that's different to what was happening at the back end of March. The lockdowns, as you can read in the newspapers, are still in full force, so to speak, in those cities where they're locking down, and I think that's going to remain the biggest factor. Of course, we're going to focus on what we can control. We certainly had 2 years of trying to look at what that looked like over the last couple of years, and we'll continue to build on those learnings and the playbook that we had, and adapt as necessary. It's a little difficult to predict exactly what it's going to look like, but we feel, said a different way, we feel better prepared and more resilient for the COVID journey of 2022 in China than we did in 2020.
Our next question comes from Chris Carey from Wells Fargo Securities. Please go ahead. Your line is open.
Hi, good morning. So actually, following up a bit on the prior question, but more globally, John said in prepared remarks there was improvement away from home channels in most markets, but not all. I appreciate Asia Pacific will have specific impacts in the quarter, as just noted, but I wonder if you could just give us a sense of the progression of the away from home channel recovery globally, perhaps relative to 2019, and if you have any context on total company or key region, that'd be helpful. Really underlying the question here is just a sense of the current state of the channel as we all contemplate prospects of slowing global growth and how the company will manage through any reversal back of the away from home with levers at its disposal. So thanks for that.
Sure. Firstly, let me step back, though. The away from home channels, whilst we have recovered to our 2019 levels, the away from home channels have not yet fully recovered, and in part that I think I've talked about this on previous calls. We've lost outlets in the course of the pandemic. That's true of the away from home, and that's also true of the fragmented grocery trade. And so there has been an impact on the number of outlets. It's not fully back. Of course, there is a distinction by sub-channel with away from home. Particularly QSR has done well, particularly those with digital and drive-through have done well. So the away from home channel, even in a country, can't be considered as a thing. You need to break it down into the different subcategories and really look at it by that. But again, globally, it's not quite back at the 2019. There are big distinctions depending on what sort of sub-channel we're looking at. In terms of the current global status, yes, China very much impacted by COVID lockdowns, but there are other parts of Asia Pacific, Southeast Asia, where there were pressures on the away from home channel. Let me include Japan, which only just lifted the state of emergency, and we should start to see that improve. As you think about the rest of the year, there are places where there is recovery yet to come. And of course, if there are recessionary impacts, either because of recession or loss of purchasing power in the face of inflation in certain parts of the world, then that will be an offsetting factor as we go into it.
Our next question comes from Brett Cooper from Consumer Edge Research. Please go ahead. Your line is open.
Good morning. Can you address your thoughts on adding non-owned products to your systems offerings to win in digitization of your customer relationships, and then maybe in alcohol specifically to help scale the system in what is a new area for the company on an aligned basis across markets? Thanks.
We have a whole series of different situations around the world. I think the starting point is there's not one universal answer to this question. And part of that is because the nature of the retail landscape, the nature of the distribution systems, and the nature of the alcohol regulation is different in different parts of the world. We certainly start from the principle that our primary interest is in the brands of the Coca-Cola Company. To the extent, and you've heard me talk about like never say never and a kind of a probabilistic view of things, to the extent that a case can be made for other products being on the trucks probably other beverage products, including alcohol, and that is somehow going to make the system, the bottlers, and it's going to sell more of our brands, then that is a question we're going to look at. And there are certainly parts of the world where going down that road has been successful in selling more Coke products. Chile would be an example of that, where there are other beverage brands, typically alcoholic ones, whether that be beer or spirits, on the truck and in the selling system, which has allowed us to have more salespeople with a digital overlay, as we talked about on the previous question, so retailers can order things. That ultimately is successful, not because we can get more things on the truck. It's successful because we can sell more of the Coke brands, and that was demonstrably true in Chile. Other parts of the world are not necessarily the same initial starting point, and it might not make more sense. But the question will always come back to, I'm always open to hear any ideas that are going to drive more business results and better business results. And my starting point for more and better business results is selling more Cokes and Coke products.
Our next question comes from Bill Chappell from Truist Securities. Please go ahead. Your line is open.
Hey, good morning, everyone. This is Stephen Langle on for Bill Chappell. Can you help us understand the ultimate goal of the GOAT marketing campaign comparing regular Coke to Coke Zero? Is there a potential expectation that Coke Zero may be bigger than regular Coke in North America within the next 5 years? Thank you.
That's a simple one. No. I'm not sure there's anywhere in the world that Coke Zero is bigger than Coke. There are certainly some countries in the world where the combination of Diet Coke and Coke Zero sell approximately the same as Coke Classic. In the end, Coke is a great franchise. We make available the classic version, the Coke Zero Sugar version, and we invite consumers to drink the one that best suits them. We are not trying to predetermine the mix structure. We are trying to offer the alternatives to invite the consumers into the franchise. But no, specifically, I don't expect Coke Zero to overtake Coke Classic in North America in the short term.
Ladies and gentlemen, this concludes our question and answer session. I would now like to turn the call back over to James Quincey for any closing remarks.
Thank you, operator. Well, just to summarize, obviously we're very pleased with our first quarter results. And while there are clearly more clouds on the horizon, our strategy is intact, and we are well equipped to execute and invest for sustained growth. Thank you for your interest, your investment in our company, and for joining us this morning.
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect.
There we go. What a great morning this morning for Coke. Thank you very much indeed, everyone that joined me. That's the end of our Coke presentation. And we're now going to go over to the main part of our show. So as you can see, the market's doing pretty well this morning. What we're going to do is just take a 1 minute break. So go and grab a cup of tea and we'll be right back with you in just a minute from now. And we're taking a very short break. See you back in just a moment or two. Here we go. So we're just taking a break now, and we'll be back very, very shortly with you in just a moment. Go and grab a cup of tea, and we're going to start the morning. It's looking pretty good, and we're getting ready for another great day on the markets. Just coming into land now here on SPCE today, looking good. So let's get straight into the markets, and here we go. Everything's pumping up now, looking very nice. The very opposite of what market profit is predicting at the moment. S&P getting destroyed. Well, my portfolio is doing very, very well. Let's have a look. Let's go and see where the damage is coming from, and let's clean away the tickers for the minute, and let's get straight into the trades. Okay. Here we are. Let's go through the markets right now. Vanguard S&P is down 1%, 1.65. That will probably be Apple, I would imagine, if we go across and look at Apple. Yeah, Apple is down 1% today. getting ready for, of course, their earnings later in the week. Market, please, others of us want to make money. S&P getting destroyed. Let's have a look. The markets are starting to come up now. We had a good return on Coca-Cola this morning. Very, very nice indeed. Over there on TikTok, welcome. Come and join us on YouTube. We're live here every morning for the opening and closing bell. S&P will soon recover. Don't worry about that. Let's go through. Tesla is down, but it's moving back up again. Rivian having a great day. We might be able to make some profit today on Rivian if we can. I last bought in at 35. So I want to do a sell at 34.90, sorry. So 35. Virgin Galactic is doing well today. It doesn't want to go down. It's my best stock. I keep saying it. I make videos over and over again that this will be my $100 stock, and very few people listen. We shall see. If you want to make money, you need to short. I never short anything. It's the shorters that are bringing the market down. It's the shorters that are bringing the market down. They're betting on everything going down, of course, putting their money into negativity. I won't do that. I appreciate market you do that. I appreciate it works for you. It's not for me. It's not how I get up. I wouldn't even want to get out of bed in the morning if I spent my life trying to find ways to bring markets down. I just don't see the point. To me, I don't live that way, but I understand you do, and we make money because people like you exist. You're making money right now, but I'm holding out, and when it starts popping up, of course, the money you're making from the markets now will come back to me. And in the long term, people who invest in the upswing always win on the people who invest in the downswing. So, market and will make money right now. I have no doubt about it. But the time will come when market will lose all his money and my stocks will go all the way up. It's how the markets work. They go up, they go down. We make money both ways. It is. We all need everyone to be part of it. Works right now for me too, Profit. Don't fight the Fed. You are being negative with shorts. All right, we're up today, 1.25 on Virgin Galactic. I only short when the stock has been pumped and there's no catalyst to continue. Everyone plays it their own way. Right, we're about to turn green today. Looking very, very nice. It's a good day. Amen. Don't fight the Fed. There we go. Let's have a look at what's going on here now. A lot of comments, a lot of action in the markets. Looking very, very good. If you've just tuned in, subscribe and ring the bell. Give us a thumbs up. There we go. Thumbs up, everybody. Market Profit saying don't fight the Fed. I don't even pay any attention to the Fed. I have to be honest, I don't pay any attention. I'm more interested in the people that build the stuff, that the future, where the world is going. For example, Elon Musk. I made a video about Elon Musk the other day. It's going to be the biggest company in the world. It's going to be absolutely massive with the AI. The AI is going to eclipse what everything else is going on with the cars. Tesla is going to be $6,000 in 5 years' time. Just watch. You cannot buy enough Tesla. You cannot buy enough Tesla right now, and I'll be making more Tesla purchases as time goes by. All right, we're about to turn green. Vanguard S&P is returning. There we go. Space, the best I hold. Yes, indeed. It's all part of the future. Even Elon Musk has got a ticket on SpaceX. Virgin Galactic. Tesla's now coming back up again. Rivian is coming back up. Hope to make a profit with Rivian today. Virgin Galactic, thank you very much for my coffee. There we go. Virgin Galactic now is up 1%. There we go. Amazon is returning. All the great companies are returning now. Twitter's going down. It's all hype. I'm out of Twitter. I am trimming my shorts right now. Yep, trim your shorts right now. Elon is my hero. There, Mike says. Absolutely right. Nvidia is pumping up. That'll be very, very important in the future. Meta is returning. All these stocks are oversold. Everyone knows it. And now is the proof. There you go. Everything is now flying up. We are going to have a green day today. There we go. Very, very close. Very close indeed. There could be a pullback. We know that. We know times are difficult now, and the shorters are desperate to drive the market down, because what we could end up now is a short squeeze. The shorters get absolutely liquidated, especially if they're using margin. They could be squeezed, and if we get a big pump, they'll be squeezed out and the markets will fly up. Then, of course, there'll be profit taken off the top and down we'll go again. It's just a cycle all the time. All you got to do is either hold for the long term, or because ultimately you'll be up, or keep taking profits. In a market right now when I'm using so much margin, I'm not trading because I have to. There we go. We're green. I said we'd go green, and we did. Green day market. There we go. All the short. Now, if we get a big push now above 2%, there'll be a massive short squeeze because the market is full now of shorters, people who are banking on it going down, and those people will look at it and go, hang on a minute. What a short squeeze is, by the way, if people are investing and the market's going down, they start to lose their money because they're not buying shares, they're buying contracts, they're options trading. They are short in the market, and what happens is at some point they lose their money, they get liquidated, and they have to either sell at a loss, which pumps the market, or they buy in. Because they don't want to miss out, fear of missing out, FOMO. And then suddenly you got massive amounts of buying coming in. And because we have had now a month of losses, look, this at some point, we are going to turn up. What goes down has to go up eventually. And at some point, our shorters will give up. They'll make their money, and then they'll go, right, I've got to get back in because now things are going the other way. And that's when things return very, very quickly, and that's called a short squeeze. I warn, but nobody listens. So sad to see people lose all their money in this scenario. You only lose money if you sell and walk away. I've not lost any money. All that's happened is the price of the stocks have gone down. The value of the companies is great and better. The companies I invest in are better and bigger than they were a year ago. Virgin Galactic is bigger. It's about to fly. It's got its customers. It's sold its tickets. A year ago, it hadn't. Tesla, a year ago, was a very different company than where it is today. My company's EVs are bigger. All my stocks are bigger than they were a year ago. All it is the price is down because of speculation and because of shorters and all the rest of it. They will eventually get liquidated. Eventually, this will all turn up. And we're getting signs of it today. I don't think for a minute it's over. I don't think for a minute I'm about to go to $100,000. But I know I will by the end of the year. And that's really all I care about. It's where I'm going to be in the future, not where I am today. All right, we are just about to turn green. We've been green a couple of times. And market, you are not the soothsayer. The soothsayer. All right, we're holding. Are we going to go up? John Frank, Martyn is the best. Thank you very much indeed, Martyn. John Frank, one of my Virgin Galactic fans. Thank you very much indeed. We love you being here. The Wolf of Dubai, who's currently the number one ranking for SPCE, is in conversation with me at the moment. We're talking about, in fact, I'm not going to tell you what we're talking about until it actually happens. I made that mistake the other day with the moon. But I am rapidly moving up the ranks. If you go into YouTube and you do incognito, so it doesn't know who you are, and you type in SPCE stock, I am now ranking number one in many of the search terms. So I'm chasing the Wolf of Dubai to become the number one in the world for SPCE stock. I'm ranking higher and higher every day. He's still the number one. He's been going a lot longer. He has 28,000 subscribers. But I'm coming up every day, and many of my videos outrank him now. So very, very exciting stuff. We are not in competition. We help each other. If he comes on my show and does something with me, he will gain subscribers, and so will I. We all win. There's no such thing in competition in YouTube. Mr. Beast told everybody that. Don't try and be an island. Share everything you do, and you grow. So that's my open offer to the Wolf of Dubai. Okay, Virgin Galactic, not in today's world market. The number of people with money so far is greater than your advice. Not in today's world market. The number of people with money is far greater than your advice. Mike, I'm not quite sure what that means. Not in today's market. This is the... Oh, I see. You're applying to market profit. This is the end of the longest bull run in history. Bear markets can last for decades. You need to be aware of this. Not in today's world market. The number of people with money is far greater than your advice. I agree. Market profit. Look at the wider... Look at what happened in Japan. Decades of flat market. We may get one melt up before that, though. No. If you invest... It depends what you invest in. It depends what you invest in. If you are investing in the future, which is what I invest in, then you are safe. Watch the bull trap today. Most of the cash I'm sitting on the side. I have a few buys in margin in for a bargain like JCI, MLN to improve my position in them. All right, it's a bull trap. Well, it could well be. I don't mind. I don't mind. It's just back where we started. I'm not really worried. I'm not looking where we are right now. I'm looking where we are in the summer. When Virgin Galactic starts heading towards $100. I'm looking at the summer when Tesla starts going up towards $2,000. That's what I'm looking for. I'm looking for SpaceX with IPOF. I'm looking at my quantum computers. I'm looking at Bitcoin. I'm looking at all of that stuff later in the year. I'm not really interested in today. Don't really care what it does. I'm looking at the future. Always the future. All right, let's go down our stocks and let's have a quick look where we are. Coca-Cola doing well today. Had a very good lift this morning. Mullen, I'm out of it at the moment. Tilray Brands pushing back up again. That's good. Uber, I'm out of Uber. Why am I out of Uber? Because Uber has no future. In my opinion, I believe that the future is, without a shadow of a doubt, is Tesla and then Robo-Taxi. And that'll destroy it. IonQ, that's going to be great for the future. I'm holding it. I'm 30% down right now, but I'm not concerned. Ginkgo Bioworks doing very well. Coca-Cola, we just talked about it. Up today. Google, we've got the Google After Hours tomorrow. Google After Hours, and we've got Robinhood coming up as well. Who's going to be in for that one? Okay, Apple. We've also got Apple coming up shortly too. Boeing, Rolls-Royce. Doing well on semiconductors, immersion, and I don't know at the minute where is my Bitcoin at the minute. Let's have a quick look. Scroll back down. I want to get my Bitcoin up and have a look where that is. It correlates to the S&P, so I expect it to be a little bit down today, but we'll have a quick look. For some reason I don't have it open, but that's not a problem. Whoops, there it is. I just passed it. Come on, where are you? Okay, here we go. Here's Ethereum and Bitcoin. Let's open it up. Let's have a quick look at Bitcoin this morning. Okay, this is what the guys were talking about, a bull trap. I did say it would go back down again, but I'm not selling though. I'm not selling. I'm not being part of the negativity. I'm just going to hold on. But yes, it could pop back down again. Doesn't matter. Ultimately, we're going up. Down 0.5% today. So I'm down 8% right now on Bitcoin. I made my profits a long while ago. Bought back in again. Waiting for the next push. But right now, we're down 1%. And let's have a look at the comments coming in now. It's always nice to have dreams, Martyn. I look at reality. My dreams are my reality. The market used to be based on trends like market suggests, but there are no trends in today's market. I agree with that as well. Let me correct that. There we go. Wow, Nasdaq Golden Dragon, China index falls 4% at the open. The Golden Dragon China index falls 4% at the open. There we go. Where are we now? Let's go back to our stocks right now, the main portfolio. Let's go through. Look at VU. VU is down 1%. Down 2%, 1.82 now on VU. Tesla is holding, doesn't want to go down. SPCE, that's my stock right there. That's my number one stock right there. Doesn't want to go down, no matter what you say about it. I don't believe in trends. I don't believe in any of that sort of stuff. Lines on charts, none of it. It's not the real world. Right, Virgin Galactic, where are we going to go now? Too much volatility. I like volatility. You can trade on volatility, but at the moment I'm not trading. I'm just sat on the sidelines. Amazon going back down again. I'm just watching all the fuss and the chaos and people stressing over fears and worries. Well, it's no way to live your life. Who Dares wins? SAS. I did some training with the SAS years ago. And Who Dares wins? Tesla is up. Sorry, is down 2.4, but pushing back up again. Rivian, hoping to make a profit there this morning and buy it back on the dip. Virgin Galactic had a little pop, back down again. Perfectly fine. Perfectly fine. Do not worry about it. I'm not concerned about it. Twitter, recession imminent. Recession imminent. Market profit is predicting the end of the world again. And that's fine. You can go along with that. No, I mean volatility for trends, to be real. I would see what you mean. All right, Meta popped up, back down again. Gores, Guggenheim. So was it a bull trap? Well, it was a bull trap if you bought in and then got caught. We got caught at the top. I didn't. If I had a bought in, I'd have sold immediately. I would have sold immediately. I wouldn't have been bull trapped into anything. Remember, always be ahead of the market. Remember, this is all priced in for what's happening. This isn't where we are today. This is the price of the stocks are what people think the price will be next month, next quarter. That's where we are right now. So once the price has been built in, then and all this negativity, then you will see at some point an upswing. There has to be. There has to be. Just based on all economic data, I told you to sell on strength. You did. Boeing is down. Apple is down but pushing up. Google is preparing for its after hours tomorrow. Coca-Cola had a great day today. I'm up 9% now on Coca-Cola. Very, very nice. I've got good dividends on it. I've been 100% correct this month. You have, I have to say. You have, but where we are today is not where we'll be tomorrow. Tomorrow, eventually, you will be wrong. Well, of course, you won't be wrong because at some point you'll say it's going to go up and then you'll be right then too. But at some point, the negativity and the selling off will end. And of course, at that point, I know you'll change. Things, you'll be different. You'll be prophesizing something different, of course. I understand that. But the difference is, I've not acted on it. I don't like selling when I'm down. There are times to sell when you're down. I get it. But I believe I've got good value and good stocks. The high-risk stocks I haven't got much of, but it depends what you regard as high risk. People say Virgin Galactic is high risk. I don't see it as negative, high risk at all. Negative vibes will never prevail. Not long term, anyway. Market, do you realise that fear is the biggest drive in today's news feed? Just like they want. Yes, but it doesn't affect me. I'm not fearful at all. I'm absolutely never fearful. I'm concerned. I don't want my stocks to go down and my value to go down, but that's only really relevant if I was retiring today. If I was retiring today and Leah said to me, right, Martyn, sell all your stocks and shares. That's the money we need to pay the bills. I'd go, Leah, can we wait a little bit? No, got to retire today. I want that holiday on the beach. Yeah, but then it wouldn't be good. I'd still have 42 grand though, and I'd walk away. But at the end of the day, that's not what I want to do, right? And that's not what I'm going to do, and that's what everybody wants me to do. Be negative when markets are horrifically overvalued. Be positive and bullish when markets are healthy and cheap. Should I get margin account to get more space? I'm never going to. I use margin. See, the way I look at this, this is simple, right? It's simple. Everyone's situation is different. Bean, just listen to me one moment, all right? I'm not giving financial advice. I'm not going to tell you what to do, but just listen to this, okay? Everyone's situation is different. If you have a mortgage, if you have a car loan, if you have credit cards, you should be paying those off first. Number one, you should never use margin if you owe money to anybody else. Okay, because if you owe money on a credit card, you're paying 20%, 23%, 25%. If you have a mortgage, you have a car loan, pay those things off first. So everyone's situation is different. I have no mortgage. I paid my mortgage off, worked for years, got it done. All right, I have no car loan, paid my car loan off. I sold my car, don't own a car. Got no credit card debt. Got a perfect credit score. I'm in a position to now invest. So I've used margin on Robinhood because it's 3%. I wouldn't use margin on Schwab or someone who charges 10%. No, because you've now got to make 10% just to cover the interest. We're talking 3% on Robinhood. So I'm using some margin, but I'm not using all of it. I've used a decent amount and I come in and out of it. So everyone's situation is different. So you got to look at your situation and go, do I owe any money? If you owe money, I wouldn't be using it. So there you go. Very, very important. Ali Isles, scam alert. What's that? Let's have a look. Ali sent me in something. So that's my view. It's not financial advice, but nobody knows. I don't know I do not know Virgin Galactic will go to 100. I believe it will. Totally understand that. You understand? Thank you very much indeed. So I'm sure you'll make the right decision. We've given you the best, it's not advice, but best experience I can. It's honest, it's real, it's genuine. Do not be fooled by claims like these. They use different people from around the world and say the same thing. What is that, Ali? What are we talking about now? Morning, everyone. What did I miss? Any updates on the source? Fusion, get out of it. The market will be back because AI and automation were the biggest technology revolution since electricity invented, but it probably won't happen for a decade. Are you kidding? The AI is next year. Next year. And of course, Virgin people buy ahead of time. Click the link. Okay, I'll have a look. People will buy into the future. Tesla is the future. And the great thing about it is Tesla is the AI, is the batteries, is the solar. It's not like, oh yeah, but I need to get into that company when it pops. This is it. This seems expensive right now. This is cheap right now. Market profit won't agree. He'll say it's overpriced nonsense. But AI will take over the world. Anyway, yes, and Elon Musk is calling for regulation as well. Anyway, Tesla's pumping up the overall portfolio. We are green again today. There we go. Just on that wash level at the moment. Let's go over to the link. We've got a link shared here today. I want to bring in. Ali has sent me a link. Invest in Tesla. What is this? Learn how to generate. Well, that's obviously a link. That's obviously scam. Oh God, who'd put that on the internet? Invest in Tesla. Invest now. Invest in the best. The heck is this? Is it? What is this? If you see this on the internet, obviously you don't click on this. Invest. What a joke. Put your name in. Invest in the best. Invest in the best. That is ridiculous. Look at this. A true billionaire company. This is what a load of nonsense. This is a scam. I'm going to keep that open. That's great. I'm going to use that later on. That obviously a scam. You do not. If you want to invest with Tesla, guess what you do? You go on the stock market. You don't use this. You don't use some website and click on some random scammer. Oh my gosh. Yeah, please don't click on that. The very language wouldn't be used by investors. Invest in the best. Billionaires, all that nonsense. No one would use that word. No one would use those terms. Please don't invest on that. Thanks for sharing that, Ali. We've shared it with everybody. I'll make a video on it later. Right, today we're up 0.5%. Invest in your vest. Yeah, invest in your vest. That's what you got to do. Invest in your vest. It's horrible, though, because there are people who will do it. There are people today who do it. Those things wouldn't exist otherwise. Those things wouldn't exist. If those people didn't do it, those things wouldn't exist. Crazy how many speculative stocks are holding up each the same time. All the indices are imploding at the same time. Well, I'm not concerned. Not concerned again. Not concerned at all. Let's have a look at SPCE. There we go. As predicted, no surprise. No surprise. And it's only a bull trap. If you're the bull that gets trapped, let's understand that. A bull trap is a bull trap when a bull walks into a trap. Okay? Right now, a bull it's not a bull trap unless you buy into it. Okay? I'm just leaving my stocks there, my $757,000, my 1,000 shares. And if it goes back down again, it goes back down again. It doesn't matter. It's just a waiting game. And the longer we can go on like this, the more people get liquidated, the more shorters lose their money, the more money comes back into the market. Eventually, it's going to go back up. Even if it goes back down again today, I'm not bothered. Market, do you think that Musk doesn't know how to turn a profit? He does, and you will see. What he's building is the most efficient machinery in the world, which builds the machine. And I've been invited actually to address a Lions Club. It's not tonight, it's tomorrow night. I told you it was tonight. It's actually tomorrow night. I'm still bag holding ARDX. Good luck, Fusion 301. We're sorry about that. Bag holding is horrible, we know. The S&P. S&P's great. I quite like this. I tell you why I like it. Because I'm about 2 days away. I hope it holds down for another 2 days. It probably won't. But I hope it does. Because in 2 days' time, my dividend will pay out. And I will reinvest. So I hope it does hold. I hope it stays down there for the next 2 days. And I'll buy in with my dividends. It now appears that Musk is unhappy with a lack of competition for his space venture. Is that right? Yeah, some people don't understand. Some people just want instant profit and don't understand about innovation and investing for the future. And that is what he's all about. Most CEOs are just greedy little people sitting around trying to make money. Elon Musk trying to make the world better and let money take care of itself, and that's it. He's trying to innovate, and that's exactly what he does. Money isn't the driving force for Elon. It just keeps on rolling in because he doesn't concern himself with it. And I feel I behave in the same way. But it's up 30% today, so there it is. So there is that at least. Yes, this came through as a reply to a tweet by one of his followers who shared a 2007 interview with Tesla CEO, wherein he said SpaceX doesn't have any serious competition, doesn't have any competition, and it never will do. I don't know how anyone could ever replace SpaceX now. No one. I mean, governments struggle to do it. You think about it. The people that have been into space. China, Russia, America, Elon Musk. That's it. So, no surprise, really. Vanguard S&P, I saw it, Martyn Redding, but he said that to be who he is. Martin Lucas, Elon fanboy. Yeah. Yeah, totally, absolutely, totally. We have a very similar experience in life. He was bullied at school extensively, as I was. Had a hard time at school. Always different, always being my own person, never following anybody. And there goes Tesla again. You can't keep Tesla down. You can't buy enough Tesla. I don't care how much you pay for it today. You can't buy enough Virgin Galactic either. There, I've said it. That's not financial advice, but I'm saying it. You can't buy enough Virgin Galactic. You can't buy enough Tesla. Period. Simple as. Only time will tell. Only time will tell if I was right. Coca-Cola just popped back a bit. That was a time this morning, maybe, to take some profits, but I don't want to. I don't want to be part of that. I'm not interested in 2%. I'm just leaving my money there. That's part of my pension right there. And remember, if I don't take profits, I'm not getting capital gains, and I'll leave it. I can earn the dividends tax-free up to a certain limit, so that's fine. Just leave it. Has everyone listened to his way of looking at the world's future? He's way ahead of his time for sure. Yes, Return to Space, Netflix. Watched it several times. Hopefully generations to come can stay in Space Hotel. Yeah, I've already booked my spot. I'm going to Mars, totally. Absolutely. Buy more Coke. Yeah, I've always got Coke in the fridge. Mullen Automotive. I'm out of it. Tilray Brands. Come on, Tilray Brands. Let's have a great day. One of my big parts of my portfolio. Let's ride it up. Uber, I'm currently out of it. Matterport, I'm out of it. No, I'm not. I beg your pardon. I'm in Matterport. Joby, I'm currently out of. Tantec, I've only got one share of it at the moment. IonQ, looking good, up to date. Ginkgo Bioworks, Coca-Cola just nudging back down. There was that scan we talked about. I'll talk about it later. Google's reporting tomorrow night, and they're moving up now. Apple is the biggest part of the S&P. That's all, and this is expected from Apple at the moment. This part of the cycle, no problem with that at all. Where has Peru been lately? Yes, where has Peru been lately? Can always rely on me, guys. I'll always be here, no matter what. People told me right at the beginning, lots of big YouTubers said, you are now being tested. Most YouTubers who start a financial channel are gone within 2 months. When the markets go down, they lose money, they're gone. Most YouTubers on finance are gone in the first couple of months. Well, I've been here every single day since the beginning, and I'm still here, and we're 11 months old, and I'm still here, and I'm not going anywhere. If my stocks go to zero, I'm still going to be here. I can't give financial advice, but I can make promises. I will always be here. This is what I do. And how can I say that? I've been in entertainment. I've been in the same business because I regard this as entertainment. Entertaining, broadcasting, performing to an audience since I was 16 years of age. Never cancelled, never missed, never done anything else. Never had to divert and become somebody, do something else. You might say, well, this isn't singing, this is slightly different. Well, it is singing because I do perform and sing whenever someone tips me, I do. And this show is a production, it's a show. And I've never stopped doing it. 38 years now. 38 years. How many entertainers can say they've done the same thing for 38 years? How many people can say they've done the same thing in any business? Well, I can. You can rely on me like the clock goes round. Until the clock stops, I will be here every day, always. You want a channel you can rely on? You found it. This is the best place to be, the most engaging, entertaining day trader show on YouTube. There you go. Thank you very much, Bill. Yeah. From now on, you got to say we got to go one better than that. Now, it's not just the best YouTube channel on YouTube. It's the best channel on earth. It's the most honest YouTube channel. I'll always tell you the truth, and I'll always be here for you, and I'll always commit, and I always say what I do and do what I say. Stand by what I say, because life without that is pointless. Life without that is no life. Never negative, always positive, always pushing forward. Who dares wins. There you go. 9:05 in the morning. The markets are okay today. I'm perfectly fine with that. Down 0.5%. Just got to give this time. The longer we go on like this, the better. Tilray. Let's have a look at Tilray. Where is my Tilray? Tantec. Where is it? Tilray. There we go. Up green, but a long way to go. I'm down 26%. Am I buying more? No, me. Worked at Tesco for 38 years, chilling. Yeah, me, Rob McLean. Can't get out of it. I can't believe it. Rob McLean coming here and said, yeah, me, 38 years for Tesco. Stick that in your pipe and smoke it.
Today is to join the Martyn Lucas show. Make yourself some money and have fun with a great group of friends at the same time. Go for it.
That's right. What about Patty from Italy?
Hello to everybody. I'm calling from Tuscany, near Pisa. I'm very, very happy to be here. It's very amazing. It's very funny. And to share friendship, a great channel, because you're sympathetic, because it's a great family, a pleasure, and a great emotion.
And what about Ali Tisro, our new gold member? Oh yeah, came straight in as a gold member.
You should definitely join the day trader. Join us, join the family. I'm very excited to be part of this family. We're going to make some money together, and Martyn is the most straight up person I've met so far. No chitter chatter, we just get straight to it.
No chitter chatter. That's what made me laugh. There's plenty of chitter chatter. There couldn't be more chitter chatter.
Best YouTube channel in the world. It's great family, great support all round. Not just for Martyn's channel, but for every channel that you guys come and watch. So that's why you need to be part of the Day Trader family.
Yeah, I love it. So we're just about to turn green again. Maybe not. Doesn't matter. Long term we will. No chitter chat. Yeah, it makes me laugh. No chitter chatter. No chitter chat. You couldn't get more. I love this show. Market Profit. There you go. And Market Profit. I love you too. You are an integral part of the show. And it's true what Market Profit said the other day. Even though he's not a member, he has contributed through super chats many times. And Market Profit You are extremely valuable. I cannot tell you. The live shows, I say over and over again, I make hardly any money, just literally a few cents to sit here for hours talking to you. The only way I make money is the YouTube, is the videos I put out, and the members and the super chats. That's how I make my money, and I appreciate when you donate to my channel hugely. It's what keeps me in this chair. I don't expect to get rich or even care less about that. I just want to be able to pay the bills. My internet is expensive. I have the most expensive internet in the world here in America. $135 a month for the internet. Can you believe I pay $135? That's £100, folks. Over in England, I pay 20 quid. I do need the best internet, though, obviously, for you guys. So it's expensive sitting here. And this studio cost quite a bit of money to build, but I wanted to bring you the best quality 4K streaming, the best cameras, the best sound, the best lights, the best production. So all of it is funded and supported by you guys, tipping me, supporting the show, and that is it. As long as I can earn a few bucks a day and keep the lights on right now, I am more than happy to do so. So thank you very much for your support. Yes, I know. Tesco, we often went there when we went to London, Rob. Yes, Tesco, we all love Tesco's. Thank you very much indeed. Let's keep on going. We're green now. Market, you are a channel friend. Absolutely he is. We love what he says. Totally agree. He's been right a lot of the times. Just because he's right, though, doesn't mean to say I'm going to sell my shares. He's right. We are in a bear market, or at least at the moment, it suggests that. I'm always bullish, though. Someone said that about bearish and bullish. I'm always bullish. Why would you ever be bearish? If the price goes down, the price goes down. That's other people's problem. That's other people's problem. Remember, the companies I invest in haven't gone down. Tesla's not a worse company today. Virgin Galactic's not a worse company. They're all better companies. So I'm always bullish because I'm investing in good. Remember what the word means. Investing. Investing is when you're putting your money, your belief into something because you believe it'll be greater in the future. What the hell would bearish be got to do with that? Why would anyone invest in anything that they're negative about? There's no point, unless you're short in the stock, of course, right? These are all great companies. These are all good companies. I'm always bullish. If I wasn't bullish, the day I'm not bullish, the day I'm bearish, is the day I sell everything. Obviously, I wouldn't own it. Why would I own it and sit on it if I was bearish? Why would you put any money into something? Obviously, the only reason why you'd ever change your mind is because not the markets change, not people. People don't concern me. What people are doing is irrelevant. They're just affecting the price. The actual product, the actual company is the same, hasn't changed. Tesla isn't going to change and become something else. It's just going to keep getting better. They're just overvalued. They're overvalued because we are now innovating for a very, very different future. And we're not in a normal market. We're not like we used to be. When you talk about the stocks are all over the place, no fundamentals, it's because we're now entering a whole new... This is like the Industrial Revolution, when everybody was buying into a whole new world. We are now investing in the space revolution. We are now investing in the future of intergalactic flipping multiplanetary species occupation. The whole AI, the whole world has changed. So everything's gone out the window. What market profit is basing his facts on has gone out the window because we are looking at a company like Tesla. It's going to be worth thousands and thousands of dollars a share. So today it seems expensive, but it's not. It seems expensive on paper. Markets going, that's really expensive for a car company. It's not a car company. It's not a car company. It's a software technology company. It's going to change the world. So get ready. Get ready for it. Anyway, but don't listen to me. Beaten down tech may be rallying on the Elon Twitter buyout rumors. I'm not interested in Twitter. I've made money on it, but I really couldn't care less about Twitter. See, again, Elon Musk will probably buy Twitter, right? Brilliant. But Twitter doesn't do anything. Twitter doesn't make anything. I don't care what Twitter does. I don't care if it goes up, down, sideways. I don't even care if it doesn't exist. I don't care. What does it do? Nothing. I don't care about Twitter. It's great for influencing stock price, but that's just people doing silly stuff. Doesn't stop Elon Musk making batteries and AI and robots and going into space and all the rest of it. Doesn't have nothing to do with it. Nothing to do with it at all. Anyway, are we green today? Yep, we're green. It may go down again. I'm not bothered. People said that about Ford in 1927. What did they say about Ford in 1927? I'm not a Ford fan either. I've said it time and time again. Ford are just greedy. Ford are the very opposite of Tesla. Ford just want to make money. And I'll give you an example. Ford will make any car you want as long as it's black. Right? How can they make the car cheaper? That's Ford. Rolls-Royce, on the other hand, how can they make a car better? Rolls-Royce is like Tesla. How can we make it better? Ford just want to make money and mass-produce cars. In a way, that's good for them, not good for the customer. And to prove that, only till recently, you would walk into a Ford shop, shall I get started again? And they would try and sell you a gas car. Within the other room, they're trying to sell you an electric car. What a hypocrisy. What a lie to your customer. Hey, mate, come over here, buy a gas car. Hey, mate, don't listen to that guy. Come over here and buy a Ford Mackie. That's the future. Hang on a minute. The gas guy over here said I should buy this Mustang over here. He said it's better. Don't listen to him, mate. Come over here and buy the electric car. That's the future. Hang on a minute, mate. The guy at the other end of the shop says I should buy a Mustang. Nah, don't listen to him. I tell you what, mate. If you buy this Ford Mustang today, this nice big 6-cylinder, 12-cylinder noise, massive, great car, you can buy it on finance. And you can buy it on over 7 years. Oh, brilliant. I'll buy it over 7 years. Hardly anything. Interest rates are really low. Okay, I'll do it. All right. But what happens in 7 years, though, when the electric car takes over and the gas car's worth nothing? Don't worry about that. You've got a 7-year finance package on this. Yeah, but in 7 years' time, when I've got to pay off the balance, the car's worth nothing. Don't you worry about that. We'll trade it in for an electric car. Yeah, but it won't be worth anything. Oh, don't you worry about that. That's what's going on in Ford right now. So what did they do? They tuned into the day trader. They heard what I was saying and said, you know what? Martyn Lucas, the day trader, greatest channel on earth. He said we need to be two companies. So guess what they did? They split their company into two. They had the EV section and they had the gas section. The only trouble is, people aren't bloody stupid. It's the same bloody company, right? Over here, got one guy saying one thing, and over here, you got another guy saying the complete opposite. Absolutely ridiculous. You will not walk into Tesla today and find a little bloke in the corner, a used car salesman, trying to sell you gas cars in the corner. Hey mate, I got some early Teslas over here. We put a bit of a gas engine in this one. You like this one? Come and buy this. No, they wouldn't do it. Why? Because it's a lie. Why? Because it's confusing to the customer. Because it's not good for the customer. It's just you trying to make some money. It's like a drug dealer. I'll sell you anything you want to make some money. Ridiculous. And because of that, Ford, I wouldn't invest in it. What a joke. That's our problem. Car salesman. I have a Ford Escape plug-in. Best of both worlds and half the price of a Tesla. Ford Escape. My wife's got a Ford Escape. And she's paying off the loan. Doesn't owe any money on it. And I said to her, never buy another gas car. She's already got one, so it's a bit different. But will never buy another gas car again. I don't see the point of a plug-in hybrid. It's pointless. Either electric or gas, forget it. Hybrid, waste of time. That's like buying a VHS video recorder that's got a CD in the top. What a waste of time. What a waste of time that is. Just get the CD player. Remember those VHS that had DVDs in the front? What a waste of time. A hybrid on the short-term future, the bridge the gap. Yeah, but forget it. Burn the bridge. Jump over the river. Get on with it. Don't waste time building bridges. Swim across the river. Swim upstream if it's harder. Go the hardest route. Go upstream, get the other side of the river and get yourself the electric car. Burn the bridge. We don't want the bridge. Hybrids are the people that... Hybrids were made by the companies that didn't know how to make an electric car, that were desperate to sell you anything other because they thought, well, people want something. Let's make this car over here because somebody will buy it. Forget it. I'd rather walk. I'd rather walk to work. I tell you what, I'll walk to work. I used to ride my bike to school. I don't mind walking to work. So I'll walk to work for a while, and I'll let everybody else buy the in-between cars. I'm not interested. I'll just buy the future cars, not the in-between ones. That'd be worth nothing in 5 years. Someone's got the wrong side of bed. You can't flip a light switch overnight. Yes, you can. That's what Elon Musk did. Unless you want every child mining lithium for the next 20 years. I'd rather walk to work. I'd rather walk to work. Make the decision. Yes, you can. You can make the decision. This constant, you can't do everything overnight. Yes, you can. Yes, you can. I understand the sentiment and what you're saying. It physically doesn't work like that. But you can. And the reason why you can, because there's enough people doing the half measures. There's enough people going half in. So I ain't one of those people. Right? The whole world can't go all in. The whole world can't go all in. But most people don't see the future. So most people will stay where they are, and a lot of people will just sit in the middle. Do what? Do I need a biscuit? Do I need a little sweeter? Why? Leah's telling me, calm down. So I just decided to go all in. Anyway. No, she's behind you. Yeah, she literally is. Leah is literally behind me. You just go down to the basement and you're working just calories to burn. Eh? What's going on with you, Bill? Down to the calories? What's going on there? Anyway. That was a live moment, live on the Day Trader. My wife coming in, directing the show. That's never happened before. She should come on camera. We should do a double act. This isn't HTML versus Web3. This is real world constraints. No, I get what you're saying. Get what you're saying. But the thing is, most people won't do anything about it. Most people will just be sat on the sidelines. So just don't be one of those people. Simple. Do you know? Ask Zach how many people in his village walk to work every day that don't have a car. Just get on with it. I know people in Africa that walk 20 miles every day to get their water. We can do a lot more than we currently do. So if life gets difficult, but it's for the future, just do it. Because most people won't do it anyway. So, you know, it doesn't matter. The world won't come to an end just because you're doing it. But you'll be on the right side of it. Anyway. You are in the house. No need to drive. Just burn calories. Yeah, I don't need to drive anywhere. Hey, Bill. Market Profit says you need some sauce. Can you get everybody some sauce? Bill, you've been asked to get onto the sauce again. Right, we're going back down again, as we said we probably would. Right, let's do Day Trader of the Day. Hang on a minute, I just realised. Has everybody subscribed and rang the bell? Has everybody subscribed and rang the bell? Let me have a look. How many people are watching? What's going on? Let's have a look. We got 23 likes. Okay. It's time to... 23 likes, that'll do. Smash the like button. Right, we got to end the show right now. We've got to end the show. I've got some videos to sort out. So let's do Day Trader of the Day. Oh no, where's my sauce, Bill? Here we go. We're off again. Right, I'm down 1%. Let's do Day Trader of the Day. Down 1%. So what we're going to do, we're going to do Day Trader of the Day. So go to your portfolio and tell me, and we'll be right back after this very, very quick ad. We're going to go into space, take a break, 1 minute, no rush, go and enjoy the break. I'll see you back in 1 minute from now. Here we go. Take a break. Okay, we're just taking a short little interval. We're back in a minute from now. And we'll be back in 1 minute from now with our next part of our show. And we're going to do Day Trader of the Day. Let's see who's in the best position. All right, let's get back to the trading position. And we'll do day trader of the day. What are the benefits of joining? Looking for a good buy? Where's the market open? Come over to YouTube. It's youtube.com/the day trader 1. All the links are above in the profile, and I'll give you all the links why it's a benefit to joining our channel. All right. We've got lots of cash giveaways as well, another reason, but I can't share any links here on TikTok. This is my YouTube broadcast here. You're just watching us on TikTok. Okay, let's get back into the trades. Here we are. Okay, let's do day trader of the day. So let's bring up my score. Where was my score? Down 1%. Let's put a 1-minute clock on the screen. It's choppy morning, Martyn, but my puts are printing still 13% up. Congratulations, I'm up 0.8. So market profit is up 13%. He's making money, as long as he's sold, of course. It's completely irrelevant if he hasn't sold. If he sold and took his profit, then he's up. Has he done that, though? That's the question. All right. Anybody else? Down 12%, Ali Isles. Another major lockdown, yeah. Looks like market profit is up again. Here we go. 3, 2, 1. Here we go. Market profit is up today. 13%. Bill is up 1%. Congratulations. Till we close my position at the end of the week, waiting for Apple earnings. Okie dokie. There we go. You think Apple earnings are going to be bad then, right? I guess that's what you must be thinking if that's the situation. Right, the winner today is market profit. Market profit is up 13%. He's making a lot of money. It's bad in China right now. It is. But we're much better prepared now than we were the first time round. So there we go. I'm not going to stress about it too much. Let's give Market Profit a thank you first of all for his honest trades. Thank you, Market, for your trades. Give him a thumbs up and, of course, give him a big round of applause. There we go. Congratulations, Market Profit. And let me just increase that a little bit. There we go. Well done. Great job. Market profit up 17% now. Sell-off is accelerating. There you go. He's increasing his profit. I don't know where his profits are coming from because my markets are going up again. Anyway, as I say, it depends what you're investing in. My overall portfolio is well protected, well balanced, but it favors high tech. Of course, the S&P is doing well, Tesla is doing well, Rivian is doing well, SPCE is absolutely on fire. There we go. All right. Okay, and just as I said, it's bouncing. Okay. All right. We've got to end the show right now because we've got a lot of videos coming out, a lot of stuff to do. We've got a great day ahead of us. We've got the earnings tomorrow. We've got the closing bell later on this afternoon, of course. We've got the closing bell this afternoon. Tomorrow morning, we've got the opening bell, closing bell. Then, of course, we have the Google earnings. Later in the week, we also have, of course, Robinhood. We have Hood later in the week. Going to be very, very interesting. Robinhood is going down now, but now popping back up again. It's a crazy market. It's a crazy market, but we love crazy. We love crazy. Up nearly 1% now. Love it. Love it. Love it. Love it. And a lot of that is my SPCE, of course. That's making all my money back. I'm up nearly 10% again. Fantastic. Great, getting ready for it. Okay, that's it. Thank you very much, everybody, for joining me today. I'll see you all back later on for the closing bell. Plus, we've got the Google report after hours tomorrow and Hood coming up later in the week. Don't forget the competition video. Have you all checked out the competition video? Has everybody got into the show? Have you done it? Coming up this Friday, we're giving money away again. Can you believe it? Here's the video. Go and watch it. Give it 3 times. Make sure you watch the whole length of it. Some of you have cheated and not watched the whole video, so you won't be included. Make sure you've watched the whole video, left the comment as it says. Right, that's it from me. Thank you very much indeed for being here. It's looking absolutely great with Virgin Galactic. I'll see you all back in a bit. Take care of yourselves and each other.